Bitcoin treasury companies are opening the waterfall from traditional asset classes like equities and fixed income into Bitcoin. There was a great slide in Michael Saylor's recent STRD ATM presentation that really drives this home. It outlined how institutional capital is allocated today without requiring any change to bylaws or investment mandates. A staggering 97% of institutional capital is restricted to equity and credit. Only about 3% can be allocated to commodities, obviously, which includes Bitcoin. We're talking about the world's largest capital allocators, pension funds, insurance companies, university endowments, foundations, asset managers, and mutual funds. This is the trapped capital that already exists. It has to make allocations within rigid frameworks, and unless those mandates shift, which is neither easy nor fast, they simply can't buy spot Bitcoin directly. Even if the people managing that capital have conviction, they still can't access Bitcoin in a compliant way. But this is where Bitcoin treasury companies come in. Bitcoin treasury companies are translating Bitcoin into financial products that existing capital is already allowed to buy: equity, credit. These are familiar tools, and they can be both powered by Bitcoin under the hood. The rise of Bitcoin treasury companies is simply a reflection of reality. Hundreds of trillions of dollars in capital flow through traditional asset management systems. Much of that capital is allocated passively or likely subscribes to building a fairly diversified portfolio. It buys what's working, it diversifies by size, and it adjusts to sectors as they rise and fall. It doesn't ask what is the best money. It just buys well-performing equities and bonds. Bitcoin treasury companies recognize this and meet the market where it is, creating securities that can channel a portion of that passive capital flow directly into Bitcoin exposure. This isn't about convincing the world to buy Bitcoin outright. It's about unlocking demand from institutions that already want Bitcoin or are at least curious but don't have a compliant path yet. In doing so, Bitcoin treasury companies are opening a waterfall. Capital that previously had no route to Bitcoin is now able to flow in quietly, steadily, and in massive size. And beyond just access, there's also innovation. As Saylor pointed out, when you wrap Bitcoin in equity or credit, you unlock the ability to create new performance and risk profiles. You can issue 1.2x Bitcoin exposure. You can structure downside protection using fixed income. These are products that serve real investor needs, whether that's maximizing upside, reducing volatility, or generating income. At the end of the day, if Bitcoin is the best long-duration savings technology, then it's going to become a foundational building block in portfolios seeking higher returns and lower risk. Bitcoin treasury companies are simply accelerating that adoption through the financial system the world already uses. That's a key reason we're seeing them rise. That's why this market is massive, and that's why capital is now flowing into Bitcoin. Thanks for watching, everyone, and see you next time.